Good morning.
Good morning.
Today it's my pleasure to speak with you for a few minutes on the current state of the financial markets and on some of the economic drivers that are impacting various countries. But before I do, I would like to say thanks to Bob English, Randy Karn, Craig Kirshner, and to each of you for allowing U.S. Capital to be your financing partner. On behalf of the entire team at U.S. Capital, it's my pleasure to say thank you. I don't have to tell you that the last few years have been interesting from both your personal and from your business perspectives. I'd like to talk this morning a few minutes on what we've all been through together. We made it. On what the financial markets look like today, and that's going to depend on the country we're speaking about. Pretty interesting about the U.S. presidential election coming up in November and what effect that will have, if any, on the economy of the U.S. and the world. And then what does the future look like? Well, what have we gone through? We've gone through incredibly unsettled markets, stock markets, not just in the United States, but around the world. We're still wrestling with high unemployment in the United States, and so is much of the world. Cautious consumer confidence. You know, if you don't have confidence, it really doesn't matter how much money you have or liquidity. You're probably just going to sit on your hands. And you have to have confidence in the future before you'll invest today. So we'll talk about that a bit. And then the bank's stability, where they at today, or perhaps I should say the bank's instability of what we've gone through. But it's pretty interesting times, pretty exciting. If people are starting to feel better, if you're starting to feel better, if investors and coin stores are starting to feel better, if your corporate customers are starting to feel better, they're probably investors in the Dow. The Dow has recovered, we're up roughly 13,000 points to where we were a few years ago. So if you just hung in through the 2008, 2009, 2010 period, you probably did okay. We're within 1,000 points of our all-time high. There's no reason to think that that shouldn't continue for a while. And our friends north of the border had a similar situation in their market. They tailed us a little bit in the decline, the dramatic fall off, but they experienced the same path in terms of the recovery. So they've come back by far most of what was deteriorated. The unemployment rate. Boy, we hear a lot about the unemployment rate. The world unemployment rate is running at 8.7%. Now, if you take a look at how that is spread across the world, you can go into Asia Pacific, which is running between 4 and 5% right now. If you go into the Middle East, they're at the 7 to 8%. Canada is running 7.2. The United States currently is 8.3. But then you get into the Eurozone section, right? 17 countries that make up the Eurozone. And their unemployment rate will depend upon the country. Some countries are as low as 3. Spain happens to be at 18, and it's quite an interesting situation. Now, the United States unemployment rate certainly is on a positive trend. We've gone from 10%. In January of this year, we added 243,000 jobs. Last week, they reported that in February, we added another 227,000. That's a good thing, and that should continue for a bit. Consumer confidence. I can't stress how important this is. Look at the rebound in consumer confidence. 2009, I guess I wasn't real confident either about some things in 2009. But November, December, January, February looked like a nice bounce back as high as we were 3-4 years ago. So that's good, and that should continue based on what we see today. The banks have really stabilized over the last 2 years. This caused a lot of headaches for a lot of people in this room when the banks started to have their rock and roll back into 2003, 2004. It's interesting, you notice 2004 2005, 2006, it's the first time in U.S. history that there were no bank failures in 2005, 2006, or in a 2-year period, I should say, that there were no failures. And then the roller coaster started, right? 3, 25, 140. So when you have 90% of all of your bank failures in a 10-year period happening in a 3-year time frame, you're going to have some problems, and everybody knows exactly what I mean. And then putting it in perspective, you see there were 25 banks that collapsed in 2008. Just one of them had 2,200 branches, and 43,000 employees were affected. So it was really an issue that we had to deal with in this country. 2012 so far, there's 11. I think there were 2 more in February that closed, but we should be certainly beneath the 92 that we had in 2011. So that's a very positive trend. Now, where are we at today? So let's take a look at this year compared to last year, and just, taking a look at, say, Canada, how they're doing, particularly housing, because that's really a driver. That's a major driver in the U.S. for the recovery of the housing. So we'll talk about Canada just a bit. We'll talk about some other countries and talk about the U.S., certainly stable, much more stable than it was a year or 2 ago, and what's happening in housing and automobiles. And then I think you'll find the discussion on liquidity, or the comments on liquidity, to be kind of interesting. You may not know, it's kind of surprising that Canada is one of the hottest real estate markets, particularly Toronto, in the world. At the first of the year in Toronto, there were over 150 skyscrapers and high-rise buildings under construction in the city of Toronto. And if you take a look at the far right-hand bar graph, the red column is home sales in January of this year, and the light blue column is the 5-year average, and the dark blue column is the 10-year average. So you look at that and you say, their housing sales haven't changed a whole lot over a 10-year period, and that's right, right? Right now in Canada, about 1 out of 100, 1% of the home mortgages are in arrears. Housing prices, while they've softened a bit, nowhere near to the decline we've had in certain cities in the United States. And it's very clear that the underwriting criteria that they use for granting a mortgage in Canada is different from what's been used in other countries, including the United States. Touch on that for a minute. But Canada is doing very well, very strong. Wow, we've been reading a lot about Greece, haven't we? Spain, Italy. It's like the lead stories every day. These are some of the countries in the Eurozone. Again, that's 17 European countries that make up that block. And as a group, they're down a little bit, 1.3. But as you keep moving over to the right, you can see the reason we've been hearing so much about Greece is they've got their hands full. And this is important to us here in the U.S. About 18% of this country's exports go to these countries, to Eurozone. And if the Eurozone as a group goes into a recession, or a steep recession, just a recession, that's going to impact the exports from the United States there. Right now, of the 17 countries, 6 are in a recession. 2 more look like they're heading that way. So we have to watch that, because if that becomes a real problem on exports, we're all going to feel that one. And I believe it was last week that the International Monetary Fund reviewed its forecasts of growth of emerging market countries. And that was in September, as I recall. And last month, February, I believe, they downgraded 5 of them. They softened the position. So the world is softening up a little bit. They have reduced the amount of growth in Russia, India, Brazil, South Africa, and China. So the jello's a little bit squiggly. And of course, the world is interlinked today. We all know from all the debates, all the newspaper articles, that the United States has a lot of debt, about $15 trillion and growing by the minute. And a third of it is owned by foreign investors. Now, let's talk about the U.S. housing market for a bit. I've taken a couple of select cities here. For example, if you take a look at the far left, it's the percentage of past-due loans. Certain cities like Miami at one point were running about 30% of the home loans were past due. Notice it's improving. Notice all of the cities on the left, like Atlanta and Phoenix and Chicago, improving, okay? The home value index is softening. I mean, there's certain cities have had 40, 50, 55, 57% decline in the value of the houses. And obviously, I don't have to comment on that. That's horrific. But that's even moderating out. Home sales in 2011, Wes Pringle was spot on with his comments, absolutely right about demand and so forth. But at least the home sales are starting to pick up a little bit. They were up 1.7%, so about 4.2 million homes were sold. But there's a deep cavity still in the housing. We've got to get the housing thing straightened out, okay? 1 out of 4 houses in the United States today has an underwater mortgage where the value of the mortgage, the payments, exceeds the value of the house. 9% of all houses in the United States that have a mortgage are past due. That's troublesome. That has to get worked through, and they're trying to work through that, but that's going to take some time. Okay? Automobiles are going great right now. February sales were super, 15 million units, way up over last year. Should continue. Check this out. Liquidity. We all know what liquidity is. We all own businesses. The top 1,600 companies, by the way, there's about 27 million companies in the United States, so the top 1,600 are less than 1%, huh? Well, those 1% of those less than 1% companies, those 1,600s, when things got really tough in 2008, they probably did what you and I do. When I get nervous of the future, I don't spend, I conserve, because liquidity gives me options. So these companies put away $500 billion of cash, and when they start to feel better about the future, they'll invest in people, they'll invest in plants, equipment, right? So you can only imagine, you know, it's a 1.3 trillion among these fellows. You have to wonder how much money is sitting in the next 5%, the next 10%, the next 15%. And as the economy continues to gain speed in traction, right, this money starts to flow in, it should be very, very positive because equipment has to be replaced, more efficient equipment has to be purchased, and additional equipment has to be there to handle the demand. The U.S. presidential election, you know how some things are hard and some things are easy? If you take a look at the last 100 years in the United States, the stock market has predicted 90% of the winners. And what that says is if the stock market is up in the 2 months prior to the election, the incumbent wins 9 out of 10 times. So, watch your stock market in September, October, and see how it's doing. Now, as you peel that onion apart, some interesting stats. The yearly average Dow gain for the last last century is that if you have a Republican president, the Dow Jones typically increases 3% a year. If you have a Democratic president, the Dow typically increases 7.8. And there's a lot of people right now that are wondering, could we have a Democratic president, the incumbent reelected, and a Republican House and Senate? Could happen. If that does, look what the history's been, 9.6. Now, a week before last, the Federal Reserve released some information, right? Here's what we're thinking, ladies and gentlemen. That's what they said. They said they expect the current softness in the economy to continue this year, next year, and into 2014. That's what they're saying. They're thinking economic growth will average about 2.5%. They're thinking best case unemployment will be at 6.7, and that inflation will be at the 3, and at the prime they're going to hold. They didn't commit for the full term, but they said it'll hold at 3.25 for this year and through next year. Canada should hold its rate also. They're at 1. There's no indication to think that they won't change that. So when you take all this, you put it in a blender and you mix it all up, what do we think the future looks like? Based on what we know today, it's very positive. It really is. We keep adding 250,000 people a month to the unemployment, or to the employment rolls, I should say. That's a lot. I mean, there's more clothes that have to be washed. There's more hotel rooms where the linens have to be cycled. There's more restaurants with tablecloths and napkins. Very positive. Certainly pent-up demand. There's more businesses being started today and succeeding, and existing businesses that are not collapsing than there has been in years. So that's very positive, getting some traction. Employment, as we say, continues to increase. There's strong credit availability and liquidity. There's a lot of money out there. It's like if you have a lot of money and you decide you want to buy something, you're just going to go out and get it because you want to have it. And we're in a great position right now for appropriate credits, for appropriate equipment, so forth. The money is there to do it. And my last point that I'd like to make before I close this morning is population growth. Canada's population is growing at the rate of about 500 people a day. The United States is growing at the rate of about 5,000 people a day. And if you take the whole world, it's growing at the rate of 200,000 people a day. Now, when you have that kind of sustained growth in population, you're obviously going to have a increased demand for products and services. And when you have an increased demand, companies are going to want to meet that demand by increasing the supply of products and services. And usually that involves hiring people, a very good thing, and getting either new, replacement, or totally new facilities. They're going to have to invest and buy equipment. So I believe that the future of commercial laundry equipment is very positive. And I can tell you firsthand that lenders really like financing Maytag commercial laundry equipment. So thank you very much. Have a good day.